Good morning, everybody. It's Michael here with your latest supply and demand market report. This is going to be looking at the two energy markets we cover, so natural gas and Brent crude. Thank you to those of you who've been in touch with your questions, for the comments in some of the videos and the ideas you've brought. I appreciate that. If you haven't liked or subscribed to the channel, please do. And before we start, a reminder that this is purely for educational purposes. I'm not a financial advisor, and any ideas we discuss here are not solicitation for you to do anything with your money. So let's take a look at natural gas. So we talked about natural gas. We've talked about it every week. We've talked about these two levels, how natural gas is in a range, looking at the level up here and the level down here as the boundaries for the range. We talked about this demand zone that it's been holding, and we're still there. Had a bit of a choppy week. Let me take out all these arrows so you can see the weekly chart better. I like to leave the discussion on there so that that we're not changing anything. It's still the same conversation. We just continue it every week. That's all. So that's what we've got, looking at the upper part of the range, and we're pulling back. We've had a really difficult week for natural gas, with buyers trying to step in and sellers just saying and kicking them back. But we're still negotiating that demand zone, the yellow box that you're looking at there. We're still in that level. We haven't taken it out. It's been very choppy, where we are making lower lows, which suggests that sellers are having a bit of their way. Even though you're in demand, making lower lows is never a good idea if you're a buyer. Prices keep rallying. They don't make higher highs, but they keep making lower lows. What hasn't happened is we haven't removed the demand zone yet. So that's the only thing that's holding it back. The levels we've talked about are still below us. These two levels are the first, and then you have the extreme down in there. That one is, I'm wondering whether that is feasible, but given that we're still in a range, it is very feasible actually, because this will be the bottom of the range. As you see here, that will be the bottom of the range, that whole area there. Okay, so it's not impossible, definitely not. Okay, so that's natural gas. Nothing much to do here. If you're range trading, you're still in the upper half of it, so looking for selling opportunities. So far, in and out, real quick ones has worked. Even though you're sitting in demand, every time you rally and people short, they manage to get it to new lows, take their profit, and they wait to see what happens again. Drawing traditional trend lines. I'm sure there will be a lot of these on various charts around the world. A break of that will be an alert for people that we're beginning to hold here. As I said to you, I think we're beginning to try to hold at this level and not falling as we should. It's very labored, the fall. Okay, bit of an in-depth discussion there. Let's go next and finally to crude oil. And ladies and gentlemen, crude oil has traded through that level like we wondered whether it would, and it's now left behind some interesting information. Two demand zones actually it's left behind. You have the base rally there. Again, this is not assessing for quality or anything, and you've got another base rally below you. We've taken out supply. We've talked about this. We've broken out of the range, and we are pulling back aggressively. Firstly to that. If that doesn't hold, then you're likely to go to that. So those are the levels of interest. You'll see why we're pulling back, because we are hitting supply there on the weekly. Now, that supply zone is still within the wider range. So just like we've talked about in the Russell 2000 when we looked at the indices, when a supply zone is like that in a range, it's not ideal in terms of profit margin. It's still there, we note it, but it's not like one that we would be putting our full position size on or even trading at all. In a lot of instances, I don't trade those. I note them, I watch them, I see how prices interact. But I'm looking more for a pullback to go long, given that we've had that weekly demand zone that has held for God knows 1, 2, 3, 4, 5, 6, 7, 8, like 7, 8 weeks, and then had a rally. So a pullback, preferably to the lower one for me, would be ideal for us to be interested, and try and take a long trade for a long-term trade in Brent. Just to recap before we finish, the reason this demand zone was of interest is because of this removal of this supply zone. That's something really, really important for those of you who might be new to the methodology. You really want levels that have shown you that they have strength in them, and taking prices to new highs is one of the ways it can show you that, and then look to buy the pullbacks. It means you have to be patient and you have to wait, yes, but that's part of the job that you've taken on as a trader. So that's crude oil. We've had a significant event. We're having a pullback. We will now have people trying to buy crude oil as it comes back. Evaluate these levels, see if they meet your criteria, if they meet your assessment gauge, however you do yours, and see which ones of them, if you want to take both, if you want to take one, whatever you decide, up to you. Remember, it's your decision. I'm not suggesting you do anything, but I am appreciative of the opportunity to share the ideas with you. Thank you all for watching, and I will see you again next week. Bye, everybody.